Welcome, dear traders. Asian stock markets are trading lower, following dynamics of futures on US stock indexes. Yesterday, high-tech stocks tumbled, thus dragging down both the Nasdaq and the S&P 500. The Dow Jones was the only index to stay afloat. It closed with gains for 5 sessions in a row. The developments on Wall Street display tough challenges which stock markets are facing now. On the one hand, Wall Street is discouraged by downbeat quarterly reports by American high-tech giants and their weak revenue forecasts. On the other hand, blue-chip stocks belonging to large, liquid and reliable companies included in the Dow Jones reported steady growth in the third quarter. Another factor which could influence market sentiment is economic conditions in the United States. The state of affairs in the US economy could assure the Federal Reserve to tone down its hawkishness in the fight against inflation. Judging by the macroeconomic data released yesterday, the US economy tolerates the burden of high interest rates. The GDP data and its components were stronger than expected, so the central bank has enough leverage to go ahead with aggressive rate hikes. The question is how long the Federal Reserve is going to raise interest rates. Other central banks in Canada and Australia have already softened their monetary policies. Yesterday, the ECB increased the key policy rate by 75 basis points, but the ECB president sent a message that further rate hikes would be adjusted to the situation. Such comments by Christine Lagarde were viewed by markets as less hawkish and cemented expectations that the regulator would scale down the pace of further rate hikes. No market participants are mulling over the Fed's policy moves. Investors have no doubt about the rate hike of 0.75% in the nearest meeting on November 2. According to the CME FEDWATCH tool, the likelihood of the rate hike by 50 basis points in December is measured at 55%. Financial markets seem to be pricing in the softer Fed. Importantly, market participants are speculating about the Fed's moderation of further rate hikes. Indeed, there is a long way until the central bank will actually hit the pause button. Meanwhile, the US dollar is losing ground for the second week straight amid expectations that the Federal Reserve will soften its stance following other major central banks. Besides, the greenback is being affected by the same mixed factors as the US equity market. For the time being, the US dollar has regained its footing in light of the US GDP expansion and on the back of the euro's pullback. Yesterday, following 2 intraday retracements, the US dollar saw growing demand. Traders opened long positions at its lows and the greenback managed to climb. Its index gyrated in the Asian trade, though following the overall upward bias. The US currency benefits from global risks and the prevailing risk of mood. The intraday corridor for the US dollar index is seen between 110.29 and 111.04. It was trading at 110.90 at the moment of recording this video. Apparently, global jitters are bullish for the US dollar. At the same time, the economies of other major currencies are in dire straits. The yen still lacks support from Japan's monetary authorities. The Bank of Japan stood pat on its ultra-accommodative monetary policy at the meeting today. The monetary authorities insist that the domestic economy is clicking into gear. Corporate profits are likely to remain at elevated levels because of a pending demand and the positive impact of the weak yen on exporters. The Bank of Japan again signaled its intention to monitor forex dynamics and intervene if necessary. Traders certainly want the central bank to comment on the yen's outlook, taking into account regular attempts of forex interventions. However, the central bank's governor gave only vaguer words that there are no sure signs of imminent changes. Following his comments, the dollar-yen pair went upwards, hitting 447.40. And the yen is extending its weakness after aggressive forex interventions, which were both obvious and hidden. The currency pair was trading within the corridor between 145.96 and 147.60 in the Asian session. The term of a Bank of Japan's governor, Haruhiko Kuroda, is expiring in April 2023. Until then, the regulator will hardly venture into a serious revision in its ultra-loose monetary policy. Recently, Japan's finance minister, Shunichi Suzuki, underscored two goals: monetary policy should encourage wage growth and forex interventions should protect the yen. He insisted that such goals do not contradict each other. The Australian dollar cannot find solid fundamentals for its growth. It's weighed down by expectations of looming policy decisions by the Reserve Bank of Australia and the Federal Reserve, whereas the US Fed is expected to maintain its extremely hawkish policy. The Australian regulator is poised to ease the pace of monetary tightening and raise the key policy rate by 0.25%. This decision could arouse questions amid unexpected inflation acceleration in Australia. Moreover, protracted decline in China's manufacturing sector dented demand for Australian commodities, in particular iron ore. Under such economic conditions, the Australian dollar is set to weaken. It was trading at 0.6414 against the US dollar in the Asian session, and the currency pair traded lower between support at 0.6407 and resistance at 0.6481. Keep close tabs on financial markets on InstaForex TV channel. Our analysts are always ready to answer all your questions. Stay tuned with us.